Hello, traders. Welcome to Price Plan Profit. It's Melissa, and I'm going to do my daily trade review for today. So, I am sharing a screen of SPX. This is a blueprint to day trade off of that's given to our SPX room at Simpler Trading before the market opens. I was teaching the first hour of this morning, so I was not actively trading SPX during the first hour, but the cyan box that you see on the screen, that's the only indicator I need to day trade. Simple as that. The PMZ or pre-market zone is very simple. When price is above the pre-market zone, we're looking to go long. Price below the pre-market zone, we're looking to go short. With this morning, price opened inside of the PMZ and flushed down. That would have been an aggressive short, would have made about 10 points to the downside before buyers stepped in here right at what was a first target this morning. Then price just hung out below the PMZ for about 30 minutes. We did get a rally up to the top of the PMZ, but really could not get any momentum above here. Now we came and made a new all-time high on SPX at 65.56. I'm just going to round up 3 pennies. That was awesome. Looked very bullish, but there was no buying going on up here at all-time highs. Rather, there was profit taking or selling pressure here at the top of the PMZ. So then the next trade that would have been valid was this candle below the PMZ would have been an opportunity to go short. During the first hour of the market, it was very choppy. When I see those choppy type conditions, what I like to do is to come down from the previous day's close and measure using Fibonacci retracement. I'm going to measure up to the high. Once I do that, then I'm going to find where the golden pocket is. And today, the golden pocket was here at 65.34 by 65.29. That is 5 points of risk, meaning if I take a trade from this buy zone, I have a risk of 5 points. What I'm looking for as price came down into this zone is I am looking for higher highs and then a candle to break above. Today, I entered this trade when price pulled back right here. As price pulled back to the body of this low candle, I went ahead and took the trade. I took a little heat. It was down about $50 a contract here, but I stayed in. Why did I stay in? Because my stop is the bottom of this zone, and we never came close while I was in this trade. The immediate target for me was the top of this EMA cloud right here. That represented resistance. So once price got above this EMA cloud, I put in a trail stop. My trail stops, I just manually move them as price continues to the upside, locking in as much profit as what I am happy with. On this trade, when I entered it, I was buying the 65.40 calls here, and I bought, the call for $5.50 a contract, and up here I exited at $8 a contract for nice profits of $250 per contract. That was the first trade that I took today on SPX. Now I'm going to remove these Fibonacci levels because the next trade that I took uses a different set of Fibonacci levels. Let me remove the golden pocket here since I've already explained that trade to the upside. My next trade that I took today was actually to the downside. So being flexible and being willing to trade both to the upside and the downside proved to be profitable for me today. Now, when I traded to the downside, I had flipped my Fibonacci levels. Why did I do that? Because price had broken below the PMZ, it had broken below the 5-minute cloud, and the 5-minute cloud was acting as resistance. Right here, we made a new low right in here. This was where I had the Fibonacci's placed before this price action right here. This is a trade I bought the 65.25 puts, I believe. I could be wrong account, so I don't have exactly, but I believe I bought the 65.25 puts right here because my first target was the bottom of the cloud right here, as well as from the original Fibonacci levels, the 764 down there at 65.2284. So that was my target, the cloud, and the 764 Fibonacci level. That's why I bought the 65.25s. I went short right here on this test of the bear channel. After it had already proved to be resistance, we had a nice inside candle followed by a breakdown candle that gave me candle structure here as well as Fibonacci levels. I bought the 65.25 puts, and once price got below the EMA cloud, which was the bottom of the cloud, was my first target, I went ahead and put my trailing stop on and was trail stopped out. I was in this trade a total of 1 minute, and was trail stopped out here. Now, had I not placed that trailing stop, obviously this could have been a much larger winner because price did come down to the 764 and it actually came all the way down to the 887. But that's okay. I'm not looking for home runs when I'm trading SPX, especially if we're not in a defined trend for the day. So I will take the base hits, collect what the market gives me, and then look to re-engage the trade. I never got the opportunity to go long or go short again the rest of the day, so only 2 trades on SPX. Up next, I want to talk about 2 trades that I closed. First was a runner in Freeport Macroman. I had been in this trade for quite some time, and the options were expiring on September 19th. With the market rallying, I think I exited these trades right about where the S&P 500 was at its highs. And once price came up here to this inside, followed by a gap breakdown candle, once price came into 45.32 today on Freeport, I went ahead and got out of that runner contract there. So I am completely out of FCX. Then I took a loss in HIMS. HIMS is just running out of time, and it came up into a sell zone as the market was making those all-time highs. And I was like, you know what? The position is at a loss, but I'm going to go ahead and exit the trade for a loss at this sell zone and look to enter a new trade with a further dated expiration if I decide that HIMS is acting well enough to make a spot in my portfolio. So I took a loss on HIMS because really of time decay. Honestly, the price that I had entered HIMS at was actually right in here, and that's where I exited it. The problem is that it had the pullback, then a ton of time to consolidate before it started moving up. So time decay got me on this trade. And the fact that we did not bounce from here, we went down to this lower buy zone. So took a loss on HIMS, but not a huge loss, nothing that hurt my account for sure. And I did it at a sell zone, so I am happy that I did that. Up next, we'll look at Delta Airlines, which I started this trade yesterday. It is October expiration for Delta. I got in down here at or around $60. I bought the October 17th $60 calls. They're up about 15% right now today. And my trim is up here at $63.44 by $64. So nothing was done with this trade today, but the position is up from about $1.40 from where I got in. The other trade that was started yesterday, a swing trade again out to the October expiration, was on Masco. I entered the trade here at 72.90 and today we closed right at 73.17. It's up a little bit. It's a baby percentage up, but there's nothing for me to do. I would add back down here at $72 and my trim is at 75.23. So nothing to do on this trade today. That's going to wrap up what I had going on today. A couple of day trades on SPX, closed two positions, HIMS and Freeport McMahon, and then nothing to do on my two open swing trades. I hope you had an awesome day of trading. And if you're not a part of the Trendy Trading Room at Simpler Trading, I invite you to come and join Trendy John and I as we trade live every single day with our own money and teach you how we trade the trendy methodology. I look forward to seeing you in the next video.